Good evening, everybody. This is Gary Full from LTG Trading, a commodity broker firm in the city, near the city of Chicago. Currently, it's March 15th, 2020, and the time is approximately 5:30 p.m. Chicago time. Further disclaimer: there's a substantial risk of loss in trading options past, form, and I think future results. The opinions of Gary Full LTG not to predict or buy or sell my options based upon the teachings of Richard Wyckoff. Please read the disclaimer here as well. With my YouTube presentation, I'd like to offer a free 2-week Wyckoff newsletter, which I produce daily, which will be sent to you about 5 days a week. Also, 1 free hour one-on-one webinar between you and I, recorded for you, and unique, not cookie cutter, for you to understand these questions. So let's get to the issue at hand, the stock market, which is important as the market continues to go lower based upon the news of this particular virus. We see the market right here, and we see the reactionary low. This is a mistake. It should be 2020, not 2002. So it's really critical right here is that we see the markets at a level which this was the year low of the markets, 2020 at 31.81. This is significant because at this point, anybody who bought that market in the beginning of 2020 would be losing money. As the market goes higher and higher, there's really no issue with the market right here. And then we see some type of selling that occurs to the markets. Selling is a market that occurs with range and increasing volume. Selling doesn't have to have large range or larger volume, but it's basically a market that is lower. The next part, we see an increasing volume to the market with increasing range of the markets. This means it's a supply bar. It increases the range and increases the volume. This is a key substantial area here because it takes out the 2020 lows. So anyone who bought the market in 2020 begins to lose money. The market continues to mark down. We can see the markdown process by the closes on the lows. We then get an effort versus result bar, meaning increasing volume, smaller range, and a close on the high. That's stopping volume by the composite operator. Conducts a rally. This rally is really a poor quality rally because the volume becomes lighter than where the selling comes in. It's a lack of demand. The market takes out again and continues to break. Once the process has a change of behavior, which occurs with this selling bar, as well as that supply bar, the market then goes into a situation in which the demand has to be overcome this selling and or supply area of the market. And at this point, this market, this bar right here, makes all this area what we call distribution or selling on balance. If we draw our trading line across, we have a sideways cause. Instead of this cause to go to the upside, it goes to the downside. After supply has taken over from the demand, meaning the market's making lower lows and lower highs, demand is overtaking the supply area. We then see the market trying to rally again with lighter volume, which is a lack of demand. Once we establish that supply is in the market needs to go through a sideways process to accumulate the market and show demand. This market obviously did not do that. The market continues to go lower. The rally here is of poor quality because the market's not even able to take off this particular high. The market then works itself lower, and then it works itself lower. This was Thursday's action. And then we had Friday's action. And Friday's action happened to be the largest point total in the Dow ever. Followed beforehand was the lowest point total to the downside. What is significant about this is that the volume was higher, not much higher, but higher than this bar, and the range was smaller. The effort to rally was harder and more labored than the market to go lower of the markets. This market had easily wider bar, less range. Smaller bar, more volume. An effort versus result comparison of the two bars. Even though the market had a tremendous rally, it stopped basically at the resistance area of the market. Support becomes resistance. The change of behavior is supply here to the market. We'll need a change of behavior to the market in which the market will need to show demand to overtake that supply, needing larger range and larger volume to the market. Extremely important, because right now supply is overtaking demand, and we for bulls need to have that demand to overtake supply to ease movement. So with that, this concludes the short YouTube video of the change of character of the S&P market. We do have no idea where the market can go from here, except that currently the market's under a tremendous amount of pressure. And the market is still very, very defensive, and it's like having a stroke. The market needs to recover and to go sideways for bulls to have a chance, but they must have the demand in order to mark up or to go higher to overcome that supply. So thank you for listening. Please feel free to join me at my website. We have free webinars, free newsletters for a trial period, and we also have various different webinar series that may be of interest to you. So I want to thank you for your time listening. Be safe out there. It's a very dangerous situation. Be careful, protect yourself, and we'll see you soon. Thank you so much for attending. Bye for now.